6:13, time now for business news, and we say good Monday morning to Mike Eppel this morning. How you doing, Mike?
Good, thank you. How are you?
I'm
nice
good.
to see you.
Nice to see you too. Did you have a good weekend?
Indeed, I did.
Okay, good, excellent.
Doing the usual, you know, cutting grass and hanging out with family, and then yesterday went to the John Deere Heritage show outside
you sure
Woodstock.
did. You sure did.
Yep.
And we have the proof of it right here.
There it is.
So you enjoyed yourself. This is you in heaven. Right?
I do like tractors. And thanks to Blair Kerrigan, by the way, he doctored up a really nice picture from that tweet, and I think I'm probably going to get it framed, and it'll be up on my shelf here in days as soon as I get it back.
All right, we're gonna Blair. Thank you. Blair is a viewer who is always right up on all of those photoshops. We love it.
That's right.
Yeah.
That's
all right.
Glad
awesome. You had a good time this weekend. Excellent.
Thank you.
When it comes to the markets, we're going to start off with the rental market first. Not looking so good.
Look, it's getting more expensive, and this has been the trend. And it's in the inverse of what we've seen in the real estate market. The shift away from people buying housing because mortgage rates were so low. Some are being pushed into the rental market. You've got higher immigration numbers, Tammy. The shift back to people actually coming back to the office. So guess what? People who moved out of the city perhaps are now looking to move back in. They're not buying, they're renting. So the price goes up. Bullpen Research and Rentals.ca saying that the average Toronto monthly rate of rent from just a year ago is up 24%. You're looking at around $2,600 a month. A two-bedroom setting you back now by about $3,200 per month. And across the country, rental prices are up 20% and about $20 a month below the previous record high, which was seen pre-pandemic. So the rental market is red hot right now. It's very expensive. And, the other thing that's probably going to keep prices elevated are rental or purpose-built properties for rentals. Is the construction sector going to slow down there? And are people who own condos, if their monthly borrowing costs go up and they were previously renting those properties, are they going to have to jack up rates to offset their higher mortgage and interest costs? This is a long-term trend. It's getting more expensive, building on inflation.
Yeah, and again, inflation numbers, those are coming out tomorrow, so we'll see what happens for July.
That's right, and it's going to be a key contributor into the inflation rate, which is still going to be up and around 7.5%.
Also, with inflation, we're going to have the data in tomorrow morning, but we're also going to get some more earnings from some retail sectors, some big names like Walmart.
Yeah, and it's not necessarily going to be about how much the companies are making. It's about where they're seeing consumers spending their money, because Walmart's already warned that because of rising inflation, people are spending more on basics, food, and gasoline, not spending as much on clothing. So they're actually starting to have to discount things because they have had too much inventory. We're going to get more details about that from the Walmart earnings. Home Depot will report tomorrow, and that's going to be interesting to see if, in fact, the pace of home renovations has started to slow again as borrowing costs go up. What did people do during the pandemic? They invested in their properties because real estate prices kept climbing. They were borrowing, sometimes against their homes through home equity lines of credit, to spend on those renovations. So we'll get some more data and insight from these big companies about consumer spending habits.
Okay, we'll also see exactly how some weak signals when it comes to the markets in China, what that's going to be doing to the markets here.
Yeah, the signals out of China from retail spending and investment were down over the past month, which is not a big surprise considering China's had a very strict COVID restriction measure for the past several months. They've got this COVID zero policy. You can debate that, but it has sideswiped their economy, and they cut interest rates today. So that might slow the global economic growth prospects again. We're already seeing it show up in the morning trade for stocks, which are down for the most part. Keep in mind, stocks have been up 4 weeks in a row. It's been a nice rally, but the price for oil is down 4% this morning, and that's pretty significant for a trading downdraft this early. And we'll be watching the price for gas as well this week. Tammy, came down over the weekend to $1.67 here in the GTA, dropped about 8 cents over a couple of days. So the late week spike that we saw, that quickly reversed course. We are not likely going to see a change at the pumps until Wednesday at the earliest.
Okay, big roller coaster with gas. It's just
And it sure
up
has
and
been.
down.
It
Yeah.
sure has. As long as the trend keeps going lower, that's what we want to see.
That's what we hope to see. All right. Thank you
Yep.
very much, Mike. We appreciate it. We'll talk to you tomorrow.